Okay, we also do the recording. Yep. Let me see the recording. Okay, so let me see. Okay, Mirror Me, you all can check out my Mirror Me site. I run this, in fact, it's a social trading community, social trading and investment community in Singapore, but we have the community members in Southeast Asia, right, in the region. And I've been running this community for the last 7 years, 8 years already. Like our YouTube channel, actually, we interview quite a few gurus on their gurus lah. Actually, we would love to mirror them, how they can be master of their trade itself. You can check out my channel, and lately, right, we discovered cash flow technique is very important. So which I'm going to share with you all, about this cash flow technique. Next. Oh, I have my teammate here. So sometimes I say next because then he's helping me the clicking of the slide. Thanks for that, SG. So okay. Now before we go into the technique, let's look at the macro view, right? That's important. Okay. So because macro view, it will impact on our choices, right? Impact on our choices to bring value to our cash flow or to our investment. Fair enough. Yeah. So macro view, there's definitely, I believe all of us face it. So, but we need to acknowledge that, okay, is this opportunity or threat? How can we work upon this to ride with the trend and still not become more towards the negative side, in terms of our asset or in terms of our cash flows. Okay. So we will look at the market and the financial outlook, in fact, into 2024, because we're already year end. Now, we are already faced by various evolutions, as you're aware. Okay. So all these are all, I think, pretty, evolution of the AI, automation, right? So depending whether you want to ride on the trend, yeah. Evolution of financial market, that's where crypto is already coming up, But other than crypto, is there something else? So other than that, employment markets. Now, why evolution? Because, yeah, actually, this couple of years, business has not been, although open up, COVID, I don't think business is picking up very, very well. Okay, it can be fast, but it may not be very well. All right. So, in fact, going into next year, it could be worse. It could be worse off. Now, okay, because I'm in the financial market, I of course look into this fundamental, technical. But this one, interestingly, I also look into the quantum frequency. That is another interesting. That's another evolution. Other than the fundamental and the technical part, I look at the quantum frequency, and interestingly, they are all aligned in terms of the evolution, the trend, the movement. All right. So all the more we should be very careful and take note. Then, what should we be doing? Okay. So, of course, evolution of the political arena, you all would also know the geopolitical tension, that would definitely impact on a lot on the economy's part. And it will definitely ripple into our respective countries, right? The demand and supply, the economics and all that, right? So, then evolution of the nature. Okay, so the demand, supply, and everything will be affected. You all know the crops. If you want to invest, I think agriculture, but also have to be very careful, right? Which aspect of the agriculture? Then evolution of business scene, consumer market, definitely, because like I mentioned, this impact on the employment part, because business more competition, more and more entrepreneurs is going to come out, because probably more unemployment, a lot more people going for side gig, and all wanting to make more money. Okay, but let's not neglect, as we go out and make more money, can we enable our money to work harder for us also? Yeah, this is one key that, so this is the macro view. Okay, next, let's look at now, most important thing, macro view, yes, we are aware already from the news or, whatever day-to-day living. What is the impact of all this evolution to us? Right? What is the impact to us? So we have to get ready, because it's going to be fast and furious. The speed of evolution is going to be intensified, right? Speed of evolution is going to intensify. That time I give an analogy is like all of us could be forced to go into the driver's seat for Lamborghini. It may not be a good thing, if you're not trained, or first time we going to drive Lamborghini, we could be crashed. right? So it may not be necessarily a good thing for us to be in the driver's seat. And you may not be able to choose to be in the passenger seat. Not much seat for passenger also. Yeah. Okay. So this is the part that the speed of the evolution, is going to be merciless and fast and furious. Then the keywords that usually, whether we hear or we felt it already, we just never, discuss about it. It will be like unexpected, right? You cannot predict too much anymore, or it won't be even fast enough for you to predict. You cannot R&D for businesses until to come on. By the time you launch, or competitor better than yours come out. Probably there could be even better, more AI coming up, right? So there will be more disruption, positive or negatively, right? Depending how prepared you are. There could be that. So if you're not prepared, then it will become a false scenario. There could be losses. There could be fear, uncertainties. Okay, so all these are sentiments in the market. All these are also important for investing and in trading, or even in investing. Fair enough? Because in investing, we sure have to invest in some instrument. Now, how is this instrument affecting us? Whether it's a company, businesses, right? Or even other instrument, even you want to invest in gold, you want to invest in oil, agriculture, all these we will need to be aware of what is the current macro view and what can we do, about it. Then the preparedness, right? Preparedness, hopefully we're still not in the illusion part that things will get better. Okay, I think no choice. We have to be a little bit more conservative and yeah, to see how we can better buffer, whether emotionally, financially, or physically. Okay, because if we're not even prepared, physically or emotionally, after COVID or after all those jab, in fact, our immune system also affected, right? So financially, there will be quite outflow to maintain our health. Then when we get stressed out, our emotions get even worse. We get more stressful, more uncertain, more fearful. We will not be able to make appropriate decision or make appropriate choices. Am I right? So that would again also impact on our financial aspect. So financial is actually quite holistic. 360 we got to jaga, take care of, yeah, whether you are still employed, whether you're a businessman, whether you're retired, whether you want to look into side gig. Okay, now all we wanted to go and make more money because our outflow is already more than our inflow. Outflow because of the inflation, the interest rate hike, and if we have installment, we got liabilities, we got debts. Oh my God, it could be worse. Then our saving rate is not giving us value to cover the rising cost faster than our saving, faster than we just depending on one income stream. Okay, but it is not easy to go and spread out to various income streams also, because there's also risk and uncertainty, right? Whether you trade stocks, you trade crypto, you trade FX, all same lah. We all been through that. Okay, so these are all the evolutions. Wow, then cham lah, what to do? So the readiness and adaptability, we have to then go with the flow. Could be easier to go with the flow, but what else can we go with the flow? That's why later we'll do a comparison table, right? Next. Okay, so now this one just now I mentioned, these are some of the impact on interest rate hike. Go down a little bit more to the micro view. Just now I mentioned the evolution on the macro view. Now is the micro view. How does it actually impact us? So inflation is not just like whether Singapore or Malaysia, that's it. Yeah, it's global. Okay, and bankruptcy, global bankruptcy, how would it then affect us also? Okay, and currency devaluation, right? Yeah, that's important. Our Malaysian counterparts, I think it would make sense to park money in SUD also. Yeah. Then we are all like challenged by the rising USD, right? Yeah. So our assets depend is in what currency, it could be affected. So it could be halved. Asset usually is depending on what asset, like I think property is an asset, but unless you fully paid, you also don't own it 100%. Right? So then the evolution also include digital currency. So why I put digital currency as one area, because then what is the value of fiat dollars later on? Okay, so we better look into, is our fiat dollars making more value for us? Right? Okay, next. Right. So now CTAs are our call to call to action mission, because I want to share the macro and the micro view. What is it in for us, so that we can come into, before I further move on, we need to come into our objective, our mission, in fact, into 2024. Okay, that we should be looking for cash flow, positive cash flow, right? Increase positive cash flow more regularly, more consistently to us, right? Not into so much asset appreciation. That is my take lah. Maybe you don't agree with me, but I thought that, prior to we move on to look at a comparison table, let's focus on which are the instruments in the market now. We all lay on the table, which one can bring us more cash value. Fair enough? Yeah. So next, cash is king, yeah, because if you already have cash lah, when things all go into discount, you got money to buy. When you have cash, enough cash, when inflation, no matter how much height it goes up, you are not so affected. Am I right? Yeah. So that's why I say cash is king. In order to go and combat all the evolution that is not in favor. Okay. Then how to increase our cash? Other than we go and work more, take up even more side gig, little stress on us physically and emotionally also. Right? So what else then we have other than our own active work? Okay, so this is a comparison table. Okay, basically these are the mainstream instruments that we can hopefully invest or trade. Okay, I'm not into investment, because investment you put a little bit longer term, mid to long term for appreciation, right? Asset appreciation. That's why we call investment. Might invest longer. Trading is like, okay, quite immediate, very short term, right? Within 1 month or daily or weekly are trading, because in and out very fast, right? That's why just now I'm asking whether you all have any experience in any instruments. Okay, so if you were to look at this table, right, then stocks, you all know lah, if I'm not looking at any appreciation, I will make like the capital all the same. Okay, so stock will be looking at blue chip stock lah. I'm not looking at penny stocks, because if I'm not doing trading, I'm going for cash flow, I will be expecting blue chip stocks to give me dividend income. Yeah, so dividend income, then I will look at, okay, I will put it as under the cash flow column. Say estimate, usually like in Singapore. Malaysia, I'm not too sure yet from the latest. So probably depending what stocks, blue chip stocks you look into, let's say banking stocks, right? Bank stocks. But careful, we also knew banks sekali also start to collapse. Yeah, so 4 to 6% per annum. Right, this is probably the cash flow part, right? So, but what about the loss? We always must also look into the downside of the instruments, right? Doesn't mean everything will be profitable, correct? So the net yield and the loss, we need to set aside the capital loss, meaning that the drop in value. Right? Globally, if businesses are not doing well, even blue chip stocks, how best can their appreciation of their price be? Okay, so that's buffer maybe 10-20% down. Okay, fair enough, of our capital to generate cash flow for us. Okay, we need to know what is the outside of capital to generate cash flow for us. Okay, leverage, if you know what is leverage, if you trade, depending what you trade, all right, so different instruments or different platform may give you different leverage, like extra margin. Right, so the capital can be lower if, let's say, they give you some leverage, and depend on whether the leverage need to be returned or not, right? You borrow from the bank also leverage, right? Yeah. So then we have the method. Okay, method last column is like, okay, manually you're going to do it, or you park under somebody, you do it also. That means you're passing your profit and loss to the other party. You have to do your own due diligence, whether it makes sense or not, no? Okay, so that one, the risk I didn't put in. Yeah, this one I'm assuming we do it ourselves lah. Okay, but we do it ourselves, of course, then it will be at the expense of like our time and effort, set aside to do this law. That one I didn't calculate in. Yeah, CFD, you all know what is that? Contract for difference. For example, if you buy stocks, if you don't own it, then there's CFD lah. Okay, only for trading purposes, you don't really own the stocks or index or maybe even commodities, CFD. Right, then options, now like people likes to go into option because it's quite a leverage product in a way. Okay, it can be a high risk high return thingy. right? So there's, of course, there's courses you can go and learn, same thing. The courses is that another investment, the course fee you got to add on to your investment, capital investment. Otherwise, how to pay back your course fee, right? So this 10K, I don't know whether include cost fee or not, yeah? And then I just give an estimation of the cash flow. Options, if you are usually the US options, right? Stocks. So that's what folks tell me, wow, they got to stay at wee hours, US time to do their trading. Okay. So let's say this part of the world, this is the part that, okay, physically or emotionally, will you be challenged in the exchange of whatever the profit as stated here? Okay. So the loss, I just put an estimate, average. Okay, average. So then again, leverage usually is zero lah, because it's options, unless that platform does give you something. Okay. The method should be manual. Why blank there? So then we look into FX. FX is a foreign exchange trading. Okay. So same thing, actually can go below 10K lah, but depending whether is it making sense for your loss or your margin. Okay. So depending how familiar you all are, it could be higher profit. Loss, actually, it depends whether you're trading yourself, manual trading, or use some software trading, it can still be managed. Okay. Every instrument, the risks all can be managed one. Because if you ask me, all investment are risky lah. It's not because FX more risky than stocks. Okay, because stocks you invest in one company, actually if the company go bust, you also that's it, man. Right? So it's not that which one is more risky than the other, but it's that which one you are more familiar with, in risk management. Not even talking about the profit part. Okay. Next one is UT, is actually unit trust funds. Okay. Now, primarily, unit trust funds, usually, I'm not too sure, Malaysia side, maybe you can buy from Phillip Capital or some insurance platform. In Singapore, we can buy also from those direct unit trust platform, or some insurers that actually provide such unit trust for investing into various funds, maybe China fund, India funds, yeah. But in the past, so far, I think across different countries, the fund prices has been dropping. Okay, fund prices has been dropping. So whatever amount we put in, I think very challenging. So not much value back. This one no leverage. Yeah, most likely no leverage. So the profit and loss, I give an estimation. Now, whatever I put out there is per annum so far, except certain can be per month or per time lah. Per one round lah, depending whether you're trading, you're using the trading part or what. Okay, but these are the cash flow mainly for manual purposes, manual trading. The last row is what I'm going to share with you, this new technique. Okay, but it tap on the unit trust fund, but in a creative, using an automated mode. There's two options. You can do manual also, or you can do an automated mode. So later I'll share with you the secrets of how you can make this successful for you. Okay, the Dividend SP, meaning signal provider. Yeah, because this software developer of this Dividend, they also name themselves signal provider to provide signal from the automated signal to alert when you can switch your unit trust fund to go and enjoy the dividend payout. Okay, yeah. So with the same amount of capital, right, and same amount of capital, we can average take out about 30% per annum. Okay, 30% per annum. So depending which one you are comparing with, then the potential loss have leverage, but the so that means you got 150%. Okay, 150% give you yeah. So this can be semi-auto. Okay, so later I'll illustrate how this semi-auto works. Okay, yeah. So far until here, the various this table, various instrument, I believe no question. Any question you can indicate in the you can type it out. I'll look it later. Yeah. Then we move on to next. Okay, so now I'm going to share with you how to generate dividend income in a manual way. Okay, in a manual way. Because we are using unit trust fund. I believe you're familiar with unit trust fund. I don't know whether you got invest in or at least you are aware unit trust fund just now I mentioned. But I'm not asking you to invest in the unit trust fund by just buying the fund and keep it there for waiting for appreciation. Okay, this is not, like I mentioned, we wanting cash flow. And the only way for cash flow we can tap on under unit trust fund is dividend. Okay, so dividend, but because there will be costs incurred in various platforms. All right, so first point, right, we have to ensure that the platform that we are going to use their tap on their unit trust fund to generate dividend. Firstly, they must allow us free switching, unlimited switching. Firstly, free switching at no cost, bid to bid price. Okay, buy price to buy price. If it's a buy to sell, that one FX involved already. The spread involved already. Correct? Yeah. So free switching, then we can lower our cost because we need to switch average 3 times per month. Okay, switch 3 times per month, every month. So they cannot also limit 1 year you can only have how many switches. Okay, because it will affect our dividend generating cash flow plan. Okay, so this plan in such a way is that we need to ensure that we are able to generate dividend every month. Remember our mission, we want cash flow every month, positive cash flow every month. Okay, so go and look for dividend unit trust fund platform that allows you free switching and unlimited switching. Next point, you will need to set aside, usually we need to set aside the downside of the capital because meaning that unit trust fund is still investing in the various country funds or industry funds. Okay, because if the global market, their businesses or certain industry that will have corrections or not doing too well, we have to take into consideration the drop in prices. Okay, even though we're switching, we're not parking there. Right? We're not parking there for appreciation. That's why I say don't park there for appreciation. You will never appreciate this couple of years are very tough. Right? It won't be making good money for us. So we need to switch. Okay. So we have to buffer the downside of some drop in price value, even of this unit trust fund. Right? So next point, the platform should able to give us access to more than 100 unit trust funds. That means we can access to 100 unit trust fund. Why you need so many? Because every month you need to go and check which unit trust fund giving out dividend at which month. Every month or only every quarter or every year. All right. And what is the quality of the fund? After they declare dividend, to what extent they can drop the price? Okay. Yeah. So all this we need to study their prospectus. Correct. So the more funds there are, easier for us to identify those optimize price and the dividend. We want to see which one have the highest dividend and has the lowest risk, lowest drop. Right. So the more the merrier easier for us to go and select. Okay. So more than 100 would be good. Right. Not too many. 5 you macam that's it. No much choice. Okay. Then of course you have to do homework. Go and read because you invest in stock, you also read the prospectus, right? You read their financial statements, right? So funds also need to go and read the prospectus when they are going to declare dividend. Right? Are they going to declare dividend every month? What is the policy? The blackout date? What is the last date of each month they will block. No more funds coming in because to wait for dividend distribution already. Okay, how much percentage? What's the criteria? And take note, doesn't mean that this prospectus is going to last for 1 year. Nowadays things change so fast. Like I say, speed of changing and evolution. You never know when they're going to change their plan and their policy in terms of the fund and in terms of their dividend payout criteria. Okay, so this is the homework we need to do. Then of course, whether you want to put it into Excel or what, we have to schedule every month. So October, which are the fund going to pay out dividend at which date. So we have to schedule, and then you got to be alerted. I don't know how you want to be alerted. Put some alarm somewhere that this fund you got to go and take note. So this one quite full-time job. Quite full-time job. So to switch every month. And just now I mentioned you have to target switch 3 times. Depending again on the flow. They have a SOP because you tap on fund switch, they would then need to, after the, not like very accurate, today they're going to do dividend declaration, today you fund in, they need some buffer time, okay, so need some buffer time to, they want to declare dividend, maybe couple of days before you have to already into that fund, say. So after into the fund, after they declare dividend, okay, then you can then see, okay, when which is the next other fund you can switch out to, again slowly go in and wait for the distribution. Okay, now this period, there will be time involved, okay, because it's across platforms, right? Time involved. So is there you need to consider your funds, because your funds required to buy into the units to declare dividend. So this in and out, how much time required from one fund to another fund before they declare dividend? So if you average out, you can 3 times, 2 times minimum. If every month only 1 time, can the lower your lower return you will get back okay, because you only depend on one fund dividend declaration 1 month. But now I'm targeting if you want higher, because we're targeting 3% per month. So that means at least you need to switch to 3 funds. Okay, if you can switch to 5 funds, provided you are allowed to within that 1 month have enough funds for you to switch under 5 funds. Okay, now this whole plan, this whole work, you can't do it just by yourself, right? You need to rest, you need to holiday, sometimes we are unwell, especially nowadays, immune system lower. You need to share one other partner to stand by your plan B. Everything must plan B. Like I mentioned, everything move too fast. Your contingency plan. Okay, if not, it's just like your work, you stop this, that's it. Your cash flow also affected already, paused. Okay, cash flow paused. Okay, so always share with one person. Okay, okay. If not, this one 1 hour, 2 hour cannot finish as masterclass. You want PhD class already. Okay, next. Okay, I don't know how y'all felt but I find that wow, so daunting, man. Okay, next I will show you option now. Okay, now that's why I say evolution of automation using AI. Now I have this individual do for me this switching. Actually last year I already involved in this kind of approach to generate dividend in unit trust fund already. Okay, he used a manual method. Wow, seriously, manual method, but 1 year only generate about 10%. That's why I say, because manual you by hands, you cannot fight the automation AI. So if the other group, this year the other group tell me that wow, manual, okay, you know this method, fine, congratulations. But what if I told you that, we use AI instead, the signal to alert us all those daunting works, we coded it into the software and let the software alert us when to switch. Okay, but firstly they have to do some work they got to read prospectus, they still have to keep in touch with latest changes and all that, but at least they get some software to go and alert when they should switch, to schedule 1 month queue up can switch 3 times or not, to what funds. Okay, yeah. So then with that automation or in and out, they managed to get 1 year about 30%, 36% in fact. Later I'll show you a record. They started off last year, but last year I haven't met them. I met the manual one, right? So only take about 10%. So this year met them, then they show me, wow, 30% now. Okay I switched to this one already. Use the AI to help us, right? So I'm going to share with you then how do we buffer the downside. Okay, other than some of daunting works, then how about the capital value and things like that? Right? Fair enough. Next. So I'm going to share with you automated version. Similar lah, automated version. Now, it's not simple. This team need to go and check which platform, seriously, which platform can provide more than 100 unit trust fund, right? The more the merrier. Just now I mentioned to you, okay? Yeah, they need to go and search which platform, even in Singapore, can provide them more than 100 unit trust fund to switch for free unlimited switches. Okay, no fee in switching, unlimited switches, right? Because then they will cut down our cost. Also, there's this platform that they found can also give us 50% matching bonus to our capital outlay. Okay, now 50% enough, no? Quite good, 50% to buffer, okay, to buffer every year in the event there's a drop in price. I think that's very good, right? In terms of the fund prices drop, okay. If 1 year suddenly drop 50%, I think globally we collapsing already, yeah. But over the years, yeah, this 50% is very important. Why? Because it will give us extra units also, right? 50% more to our capital, match our capital, no? So we got more extra funds value to go and declare dividend, to buy units and declare dividend, right? So that means we have more cash flow come in, correct? Fair enough. Now, secondly, it also buffer. It will in a way buffer the drop in price. So later I will show you the table, the conservative side, or what if the price were to drop every year, 15%, what's going to happen? Okay, yeah. So we will show you the optimized version and the conservative version later. Okay. Now, then just now the daunting part, having to read prospector lah, go and come out Excel file to go and alert us when to do the switching lah, 2 to 3 times switch per month. Okay. Then to make sure that the fund manager pay us. Okay. Now all these are automated already. Okay, all these are automated. Semi-auto just now I mentioned, right? So which is the part that we need to do? We need to, before we take our cash, cash dividend, we would receive a notification. Okay, now this is a SG regulated product on an SG regulated platform. All right, so meaning that we will be alerted before we do the switching. That means we have to go and activate and approve that we want to switch. But of course, we don't need to go and search to go and do research which one to switch. This is the part that's automated. This is the daunting part. This one we outsource to the AI software to do. Okay, but we will receive an email notification. Oh, you have activated the switch, and we will be reminded 1 day before, for example, by the licensed agent that take note. They will take note, Zara, tomorrow there's the switch coming up. So I'm looking forward to it. So when the next day come, I receive the email notification. Okay, you have activated, you have requested the switch. I go and log in with my ID and approve, activate the switch. So we will have a notification email. Okay, you have activated the switch. Then it will switch from Fund A to Fund B. So after switch to Fund B, we know during this 1-2 week switching done, they waiting for declaration of dividend. So a couple of weeks later, I would receive into my bank account, I will receive a notification. In Singapore, we will receive from PayNow. Okay, Malaysia or a foreigner, they can send, they can TT, the platform can TT to your bank account also. Okay, so I will get an alert. Okay, I will get an alert that how much dividend cash value is being banking into my bank account. Right? Yeah. So this process would be about 3 times per month. That means I will go and activate the switch about 3 times, and I will also the past month switch, the same month I will get it, because they will have 2-3 weeks settled this SOP, then reach my bank account. Same month I do future months the next month switching. So like that, every month, recurringly, continuously, I have about 3 rounds of dividend cash payout to my bank account. Good or great? Yeah. Some of this one not those is a secure platform. Okay, it's under an insurer platform. Okay, it's under insurer platform. So insurer platform now, later I'll share with you how this thing work. So like I mentioned, we will be able to do this effortlessly, quite effortlessly. You only receive a notification, you just go and activate, approve the switch, and you will then get your cash payout the usually the following month. You need a couple of weeks to do the processing, right? Yep. So this is the automated version. So again, you can choose the manual method. You can choose this automated method. My Malaysia friend, you can earn in SGD if you have a Singapore bank account, or you can get the platform to pay you back to your Malaysia bank. Okay, no problem with that. So far, so good. So I go to the next slide.